Today I answer the coverage, what does full prior acts mean when it comes to insurance? When you hear the phrase prior acts or full prior acts from an insurance broker, they are talking about a feature in a claims-made policy form. Claims-made policy forms are a type of policy structure that is used for directors and officers, errors and omissions, employment practice liability, cyber insurance, and many other forms of management and professional coverages. You'll even see some claims-made policies when it comes to products liability insurance. You are likely more familiar with the more common structure of a liability policy known as an occurrence policy form. Occurrence forms are common in most general liability, auto, and umbrella liability policies. The key difference between an occurrence policy form and a claims-made policy form is how the policy will respond to a claim based on when that claim took place. In an occurrence policy form, the policy that was in place when the claim happened or occurred will be the policy that pays that claim. The exception to this is in regard to products and completed operations, which is a subject for an entirely different video. In a claims-made policy form, the policy that is in effect when the claim is presented or made to the insurance company is the policy that will respond. And this is where it gets a little sticky because of something called the retroactive date. When you take out your first claims-made policy, whether that's cyber, D&O, E&O, the proposal will indicate the retroactive date. Now, if there's no retroactive date, the policy will give you what is known as full prior acts. So, what is a retroactive date? It's essentially a cutoff date of what claims will be accepted in the future. Most often, the retroactive date will be the inception date of your first policy. What that cutoff does is says that any acts that took place before this date are not going to be covered moving forward. This, of course, can be a problem, especially if you've been in an ongoing business and not previously purchased coverage for one of these claims-made policy forms. The problem is that you may not know what's happened in the past that could give rise to a claim in the future. Here's an example using employment practices. A former manager in your company had a tendency to be flirtatious with some of his or her subordinates. It never really got to the point of being sexual harassment in your mind, but one day a situation with this manager got a little too uncomfortable for you and you fired them. A year later, your insurance agent recommends EPLI or employment practice liability insurance and you purchase it for the first time. You think to yourself, this is a good idea, especially based on your experience with that former manager. The policy you buy has a retroactive date of the inception or effective date of this new policy. This is common. About 6 months after you buy that policy, an employee who had worked under that terminated manager comes forward to complain about her experiences with that manager and later brings a lawsuit for sexual harassment and hostile work environment. You think to yourself, great, I've got insurance. You file the claim with your EPLI insurer, only to find out it's not covered. Why? Because the act that led to the lawsuit occurred prior to the inception of the policy, which is when the retroactive date is set. So, what's the solution? Ideally, you should attempt to secure any claims-made policy forms with full prior acts. Having a retroactive date acts as an exclusion to bar claims where the act that gave rise to the claim happened before the retroactive date. Now, in my experience, it's not always easy to obtain full prior acts on some policies, but every attempt should be made to do so. When it comes to cyber insurance, we're seeing many carriers offering full prior acts, which I believe is great, since you don't know what may have happened in the past that could give rise to a cyber claim in the future. One last point. As you renew a claims-made policy that started with a retroactive date, it's important to carry that date forward to each renewal. So if your first claims-made policy was, say, purchased on April 1st, 2012, that date should appear on each renewal moving forward, even if you change insurance companies. When you break or reset that date, you are giving up coverage for acts that may be lurking in your past. I've seen it too many times during a coverage audit for a new client where this has occurred, and it's usually due to a business owner working with an unskilled broker that doesn't understand the complexity of claims-made policies. The bottom line is this: insurance is complex, and claims-made policy forms contain nuances that demand expertise. D&O, E&O, employment practice, cyber, fiduciary, and other policies are claims-made forms. You should be working with a skilled and experienced broker that understands these nuances and can craft the right protection for you and your firm. Have other questions or issues or concerns on business insurance I didn't cover here? Why not reach out? Drop me an email, give me a call. My contact info is coming up, and I'd love a chance to talk about your situation. One last thing, if you like this video, give it a thumbs up and subscribe for more great content. Thanks.